Good day, ladies and gentlemen, and welcome to the show on this Sunday, the 20th of June, 2021. Thank you for tuning in. Now listen, guys, let's sit down. Let's try to figure this out together. And you guys can help me figure it out. I'm not a bullion banker, so I don't completely have a full understanding of the intricacies of what these banks actually do in this bullion market. I'm not, when it comes to their allocations of capital and capital management. I'm not a banker, so I don't understand it. Not fully, but we're going to sit, even though we don't understand it, this is so important, we got to try to sit down and figure this thing out. Because this Basel III is coming in, guys. And what did we see this last couple weeks? We've seen smackdowns in silver and in gold, right? Huge smackdowns. What was causing these things? Well, I think it has something to do with the Basel III coming into effect on the 28th of this month. I think that now, what I think is that they're trying to close out their unallocated silver and gold positions, which is their paper gold and silver contracts. And why are they doing that? Well, I got thinking about it last night. Why they want to close those out. The way they count gold and silver on the capital requirements for these banks is they don't count it. They're not going to count it anymore as 100% of a capital allocation. They're going to count it as an 85% of a capital allocation. And I do know about the banks. They have these capital allocations, and if they're short, well, this terrorizes them, the fact that they would be short on a capital allocation, even if it's a small amount or a small margin. So, in other words, what I'm trying to say is, if they got $1 billion invested in, say, paper silver contracts, okay, and they can count that on their books as $1 billion. If suddenly this rule comes in and says, hey, you know what, you're only able to count that billion as 85%, then of that $1 billion, then suddenly they got $150 million that they can't count on their books anymore. And so then they got a giant gaping hole in their books of $150 million of the billion, which would be 15%. And suddenly that could cause major problems within the bank, like insolvency problems and stuff. So then they look at all those silver contracts that they've been counting as $1 billion worth of silver, which is nothing more than paper silver, and they say, well, what are we going to do? Now, see, this is the part. I might not be getting this exactly right because I'm not a banker, okay? But I'm just kind of figuring it in my mind, what's going on in their minds, you know? So then they would say to themselves, hey, you know, well, we got that billion in silver and paper short contracts, and that rule's going to come in, and we're only going to be able to count it as 85% of what it really is. Let's sell it while the market's high. Let's get out of it. Let's get it into some other form, which would, as they sell it, they would be transferring that into some other form of capital, right? Maybe they could transform it into treasuries. Maybe buy 10-year treasuries. I just don't know what they would do with it as if they moved out of it. In other words, but to move out of it, wouldn't they have to put it on the market? Those paper short contracts, and wouldn't that drive the price of silver down? And they're pretty smart, these bankers, and they're pretty cunning and pretty tricky. They'd say to themselves, well, if we throw it all on the market now, boom, and we drop the market down by 15% in price, well, then we haven't gained anything. Am I figuring this right? And so then they'd say, we haven't gained anything then if we drop the market by more than 15%. as we try to move out of these silver positions. So we have to move out of them slowly. We'll dump some today, and maybe we'll dump... Right now, it would be the European banks that's doing this, because it comes into effect on the 28th for Europe. If I'm figuring this right. But now, here's the thing. From what I understand, for the LBMA, which is a much bigger silver market, and they're holding massive amounts. I've heard they might be holding as much as like 64,000 to 1. And they're like 10 times bigger than the European banks. Now, so if the European banks dump these silver contracts and gold contracts, and we saw the price drop like it did, you guys remember just a few days ago, the big price drop. If the European banks dropped it like that, trying to get out of these contracts for the 28th of this month, what would the LBMA do if they've got 64,000 contracts to each ounce of silver or gold, or maybe they got thousands for each ounce of gold? What would they do to the market if they start dumping their paper? See, you guys got to understand. It's the tail that wags the dog in the gold and silver markets. It's all these paper contracts that, from what I've heard like through the grapevine, it could be like 60,000 to 1. So if you got an ounce of gold, there could be thousands of these. And these are people who think they own gold. But actually what they own is a paper contract. And the banks, the billion banks, own probably the vast majority of these paper contracts, from what I understand. And so if they're all trying to get out because this Basel III really is coming in, then over the next few months, heading toward December of this year, they're all going to be wanting to try to squizzle out of these contracts so that it doesn't affect their balance books on their bank. And the vast majority of them will want to have to, the real big bulk of them, wouldn't be the European banks, which it comes due on the 28th of this month. The vast majority of them would be the vast biggest quantity of these paper short contracts would be with the LBMA and with the COMEX. And if they have to get out by January 1st, well, we might see volatility to the downside. That means a crushing of the markets of gold and silver continue on for months, all the way to the end of this year. But then what would happen? They would have cleared out all of these paper short contracts that they're going to clear out by the end of this year. Now, if I'm figuring this right, and then we would start to see trading only in allocated gold and silver, which would be a determination of price set on what it really should have been all along, if I'm figuring this right. And it would be many multiples higher of what it is right now. So if I'm right about all that, and I'm not sure. Listen, guys, I'm kind of walking out on ground right now that I'm not. It's like unstable ground for me. I don't know if I'm really. You guys can help me out in the comment section if I'm getting something wrong. I'm a little bit uncertain about it, but it's very important to us, and that's why I'm trying to go over it, mull it over in my mind. Because this is the end. One thing I can tell you guys for certainty, if this Basel III goes through, and I think it's going to, and I think we're already seeing the signs that it's going through, this is the end of the entire markets of them manipulating the price. In other words, the tail wagging the dog, the paper price determining the price of the real physical assets. And we know that what will happen is after the start of next year, and you'd have to wait all these months. You'd have to wait July, August, September, October, November, December. All those months you'd have to wait. But boy, gosh, it would be awful worth it. Because once the new year comes, and once there are all of these paper contracts, and the paper's not determining the price anymore, and you got gold being the tier 1 asset, oh my gee. Oh my goodness, guys. You could see $10,000 gold next year if that's what happens. But until then, you might see the lowest. They can't. First thing I'm thinking to myself in my mind, I'm saying to myself, hey, they can't drive it below mining production costs. So these banks are smart enough to know that otherwise they'll get a silver shortage on their hands right away, like big time. If they drive it below mining production costs, miners will just throw their hands up in the air and say, well, hell with this. Close down that silver section of the mine. We're not making it. It's non-profitable. And then the only silver would be coming in as byproduct silver, which would be an enormous chop because all of the silver mines that mine just silver would shut their doors if it went below mining production cost. So they can't do that. They won't do that. They're smart enough to know not to do that. And right now the silver price for mining production cost probably around $20. You know, but they did drive it right down to mining production cost back when the mining production cost was about $13 or $12, which is going back a ways now. They drove it down to $13.80. So they could drive the price of silver all the way down to maybe $21, $22 and still stay slightly above mining production costs. And I don't trust them. I don't trust them as far as I could throw them. And they might drive it down that low using these paper short contracts to try to get out of their unallocated positions between now and the end of the year. So you know what we might be looking at overall, guys? We might be looking at a silver price and gold price that really suffers between now and December. And then all of a sudden, into the new year, next year, it might take off, and it might take off like a rocket ship to the moon. And you might not be able to get any of the real physical. So if you're waiting for that lowest price between now and December, you might find it's hard to buy because as they dump out of their paper short positions, these bullion banks, they might drive the price down so low that everybody's buying up all of the physical. Premiums or not, it's just disappearing off the shelves, and you might find a period there where these London bullion exchanges and stuff, in order to get ahead of this, might be dumping so much paper, and the physical price might go down so low, it might just, even with the premiums, it might all just disappear on the retail end, and you're not able to allocate any yourself. Us guys, us apes, can't get any. So listen, you got to stay strong. Apes got to stay strong. They got to stay together, and you got to hang on tight. Hang on tight like you're hanging on to you're hungry and you're hanging on to a banana. Hang on to that stuff. And between now and the end, the physical I'm talking about, hang on tight, because you might not be able to get any at a certain point, maybe a couple months from now, when the price gets really low. Doesn't matter about premiums, because on the other end of all of this, next year, we could see your $500-$600 silver and your $10,000 gold or whatever, and by gosh, you know, we could see the kind of massive moves up that crypto has seen. What about crypto right now? Ain't doing so good, you know, but we got turmoil in the markets and stuff. Markets are all scared and everything about what the Fed might do. You know, the Fed's going to 2.5 years or 2 years from now. That's a bunch. This is the biggest bunch of baloney I've ever heard in my life. The Fed ain't going to do nothing. They're hog-tied. They're hog-tied, and they're like a little guy hog-tied, and he's over there, and he's saying, I'm going to get you guys, I'm going to do this, and I'm going to do that. You're hog-tied, buddy, you ain't going to do nothing. It's a bunch of jive, and the markets are all falling for it. They think the Fed's going to, heck, we're going to be in the middle of a hyperinflation when the Fed says they're going to raise rates. They're going to have to do a reset, not raise rates. They're going to have to do a reset or something. That's probably all in their plans now anyways, to go over into a digital currency. Oh my goodness, guys, what we're going through, this craziness, it's absolutely insane. The world's going insane. Completely insane. I don't know whether it's we're going through some area of space or something that we're traveling through, and and everything's upside down in bizarro land. But you got to try to navigate through all this and do the best you can, guys, to try to navigate through all this crap. Thank you guys for listening, and this has been your weekend show. And if I'm wrong about all this stuff, if I'm wrong in any way, because I'm not a bullion banker, so I don't know the exact ins and outs of how it all works. I think I might be right. We'll catch you guys in the next show. Bye bye.